So what's going on, guys? Here's another tutorial of me trading the US30 or a strategy that I like to use. So as always, before we start, make sure to like, subscribe and comment. Of course, if you don't like or don't subscribe, it's your choice, but make sure to subscribe, to like and to comment. So here we go. So in front of me is the US30 chart. Now simple, we want to go to the 5-minute chart since this is a scalping strategy, and as always we want to determine the trend. So if you zoom out a little bit, we always see here some kind of movements up and down, and this is why we simply use the EMAs to determine where we are heading or where we are at the moment. And here we see suddenly the momentum changing, and we see the 200 EMA, the blue line, suddenly being the highest line, and the 50 EMA and the 20 EMA falling lower and lower, meaning they are below the, so the 20 is below the 50 and the 50 below the 200, which means here we see a bearish trend to the downside. Now after we have confirmed this bearish trend, we want to see a retest to somewhere around the 200 EMA, which happened here. If we zoom out a little bit, so I need this at the moment. So now we have confirmed that we are on a downtrend, and we are here retesting the 200 EMA. Now what we want to look for is a big, since we're on a downtrend, we are looking for a big red candlestick to the downside, which means they might be totally momentum shifting and turn around completely somewhere at the 200 EMA. And at first glance what we can see is this big red candlestick, and we always want to see the candlestick closing, being almost fully closed. For example, here it was just a little bit of a not fully closed, but you still could use this kind of candlestick. But usually what I like to see is these kind of candlesticks where we are fully closed, or like this one here. For example, here we had a little bit of a bigger space between the lowest point and the close, but usually I like this one. So we have found this one at the 200 EMA, and here would be another one. This one would be small, but I wouldn't like to use it. So actually this one here on the upper side didn't fully reach, but here this one, for example, would be one of the best examples where the red candlestick is almost completely red, which means an engulfing candlestick. But we found this one and this one at the 200 EMA. Now the next thing what we want to determine, or what we want to look at, is the stochastic. Now at the moment when the candlestick here closes at the end, so this is this line here, the stochastic should be at the lower parts, which means below 50, which would be somewhere around here, and we want to be here on the lower part, which happened here exactly. So this is, so the first indicator was what we were looking for, of course the bearish momentum, and then somewhere a retest at the 200 EMA. Second, the red bilf, the big red engulfing candlestick, which is this one, the stochastic being pretty low. And the next indicator that we want to look at is the RSI, which again here suddenly sees momentum shifting, where we enter the lower parts. So here we just slightly broke below 50. If we had broken here, it would have been a much better indicator. But for this example, if we don't find the RSI being below the 50 levels on the RSI, we could still wait, because this happened here exactly, and suddenly here we had 2 points below the 50, so you could have entered even here because the line here more or less stayed at the same levels. And if we take a look at this candlestick here, which was a small candlestick, so not really one that I would use personally, but here on the other hand the stochastic was pretty high, so this is why I wouldn't have used this one. But the trade here, so it is really simple. Like I said, we take a look at the momentum to the downside, we look at the 200 EMA consolidation phase, we look for a big red candlestick, the stochastic is lower part, and take a look at the RSI and look for a momentum changing shift down to the lower parts of the 50 levels. So our entry would be here at the lowest part. Well, here we short the market. Our stop loss is at the highest point of the candlestick, and we go for 1 to 2 risk reward ratio, which would be somewhere around here, which is somewhere at the previous support line that we formed here. We retested it 3 times, so this would be your trade. Really simple, and it would have taken you about 1.5 hours. So this is the strategy for today. So thanks for watching.